What is an accredited investor? That's today's episode. Let's dive in. Hey everyone, I'm Clayton Morris.
I'm Natalie Morris.
And welcome to all of you freedom fighters out there as we are hosts of the Investing in Real Estate show. This is the show where we focus on building passive income and legacy wealth for you and your family so that you can spend more time with your family. That's the goal, right? Because what else matters? And the vehicle that we use to get there is buy and hold real estate. We buy it and we never sell it. We hold it for the rest of our lives because it creates passive income. So what are we talking about with, it's hard to say it, by the way, when I say
an accredited investor.
Is it an accredited investor? It's an accredited investor,
Yes,
isn't
you
it?
add an N to A if the next word starts with a vowel.
Yeah, an accredited investor. It's like I
Right.
was a history major,
Yes. Yeah.
not an history major. I was a
No.
history major.
Right.
Right.
I am a pumpkin. Right? As opposed to I am an animal.
Right.
Okay, that's the vocabulary lesson for today, everyone. Do not use it wrong this week. We will pound you right in the face.
So,
So
an
what we'll
accredited
do
investor.
today, right, is talk about this. And this is a term that I'm relatively unfamiliar with and became familiar with this year as we started to think about, real estate investment funds and, a lot of things in the way that we structure our business and how we interact with our clients. So we had this call with our lawyer, and he said, well, you'd want to make sure that, when you're interacting with clients, that they're accredited investors if what you're selling is securities. Well, what we do, we don't really deal in securities. We help people buy actual homes, but you
What
do
is in it? What is it an security? No, what is
know.
a security? So yeah, we don't do anything with security. That'd be like the stock market, right? Like,
Well, we don't right now, right? But
right,
say we had a crowd-funded fund where
right,
we said, okay, you can buy into this lot of properties for a certain amount of money, and what you'll own is like a portion of an LLC that owns rental real estate, right?
right.
That would be a security because it's a financial instrument that holds some type of monetary value. Okay. When you actually purchase a home, that's not a security as an investment property. That's very different. But if you were to buy like a portion of it or a fund or something like that, then that would be a security. Okay. Now, the government protects the government protects you differently if you're non-accredited versus if you're accredited. And accredited is kind of like, I wish that there were like a driver's license that you carried and said like I am accredited and I am not, right?
It's
Because
like
it
an
would sort of,
it's like an organ donation card. Like, oh, you're an organ donor. We
right.
know the difference, right? We know the
We
difference.
don't
Or
really have like a way to classify people that way. And I guess that would be kind of scary, right? Because
right.
then there would be like a really tangible way that we classify the rich and the poor. And I can see why that would not be a good thing.
And right,
Um,
and to be 100% clear, we don't like have a fund. That's not something we have. That's not. We're just talking in general terms about the difference between what that would look like for an accredited investor versus a non-accredited investor. But to your point,
right,
it's like having like TSA pre, right? Like you've got that like on your boarding pass. Oh, this person's an accredited investor.
right.
Now, this really came out of this was further explained or defined under Dodd-Frank and during the Obama years
hmm
after the financial crisis. Who is an accredited investor? And basically, just at a
Okay,
high,
you keep interrupting me, and I feel like we're not telling people why we want to talk about this. So, like, before you go down to, what it is, I feel like it's really important to tell people that this is basically the distinction that tells the government that you're a big boy or a big girl, and that you can be responsible for your own investments because you're not someone to be preyed upon,
right? Yeah,
basically.
you've got big
Okay?
boy. Basically, you've got big boy pants on. That's the way that our lawyer
Or
explained
big
it to
girl
us,
pants.
or big girl pants, which is like, hey,
Right.
you're not the person who's sitting there counting their pennies and is like, little Aunt Mildred who's got her like a little bag of pennies and she's like, okay, I'm gonna buy this investment. Like, no, you earn a certain amount of money, which we'll get into in a moment, and when you make a decision on your investment strategy, you're a big boy, big girl. it's up to you. Like the government's not going to stand there like Superman and just like be like, well, Johnny, you shouldn't have made that
Right.
investment. Good thing. I'm here to protect you.
Right. But this is a very important distinction because there are so many predatory investment vehicles that go after people who have no money. You think of the way that elderly people are preyed upon for this reverse mortgage type product,
Ugh,
right?
right.
And so if you're a company that say has a reverse mortgage or some kind of really expensive and not a good investment vehicle, and you go after all of these, pension funds or people who don't otherwise understand money, don't have money, and you're preying upon, for lack of a better word, the weakest part of the population, the government protects that. Okay. So that's why we wanted to make you understand that if you are an accredited investor, you are responsible for your own investments, and the government will say, you should have known. You've accumulated a certain amount of know-how because of what you own. And so it's important to know this, right? Because recently I was looking into investing into something, and they wanted to prove that I was an accredited investor before they let me into this investment. And so there is no they can't just look it up on my social security number. They say you need a letter from a CPA, a certified CPA, or a lawyer, or I can't remember. But I needed to get a letter signed by someone who has my best interests at heart, who's a professional, to say, yes, she is indeed an accredited investor.
Great. Okay, so let's get into some of the definitions here.
I'm sorry, but I interrupted you, and
right,
I just did it
for
again.
the third time.
Well, you were doing it to me so many times.
Well, because I just wanted to sort of set the stage at a high level first, about
Right.
what the big boy pants metaphor first, and then we can get into the weeds on the numbers, like how do you actually fall under this definition? Like, what does the
I
federal
feel like
government
I was
say?
already doing that.
Okay.
Don't you, listeners? Wasn't I getting there?
No.
Can you please take sides here?
No.
If people don't know we're married, they'll be like, those people are so rude to each other.
I know. Didn't we talk recently about being kinder just in our family in general? Like, can you be a little kinder to me, please? I feel like
Maybe you can start by not interrupting me.
You know what
Okay,
I love?
we should air our dirty laundry on the podcast.
No, we can air our dirty, because you've been asking, talking to our kids about being kinder to each other, Miles and Ava. You're like, can you please, like Ava's gonna go sit on the couch, and she's got all our little stuffed animals there. Like, Miles, why did you just get up and go sit where her stuffed animals are?
And lay
you're doing
all over her stuff.
You're doing it just to be a jackass. Like, you don't need to do that. And then Miles said to me, he said, well, Daddy, how can you be nicer? I said, I think I'm pretty nice as it is. Can everyone just be nicer to me, please? That's all I want in this family. I am perfect. Please, just be kinder to me in the family. That's all I want.
Okay.
All right. So let's get into the numbers. So again, under the Obama era, one of the things, this thing stood out actually, is that if you own the home you live in, that cannot add up to your level of being accredited. Meaning, a lot of people would say, "Oh, I've got this amount of value in my home, therefore that makes me an accredited investor." No. Under the Obama era, that's it. Nope, that's out. You cannot add in the home you live in as part of this formula, right?
Right. Okay, so we're going to get there when we talk about how you prove that you are accredited. But one big thing that we always tell you that you need to know is your net worth, right? What are you worth on paper? That is the sum of your assets minus the sum of your liabilities is what you are worth. Okay. You cannot count your home in that net asset towards your accreditation because you don't have that money, right? You own it, but it's what it's worth. No one's actually giving you that cash. You're living in the asset. So the Obama administration did change the law to say that your home doesn't count towards your accreditation. Probably, I can only imagine that people were being preyed upon. I don't know. Can we?
Preyed upon, but also getting in over their heads.
Right.
So
yeah, that's a better way to put it.
Because I think the problem is that a lot of people, yes, there was predatory practices happening out there. There were, banks that were just issuing loans to people that didn't even have, a job, right? No income, no job,
Yeah.
those ninja loans. So yes, they were like going after those people and just saying, yeah, sure, why don't you just buy a house? Yeah, I know you can't even afford it, but just do it. But also there's personal responsibility mixed up in this too, right? It's like, if you don't have a job, you don't have the income, why the heck are you going and getting a loan and trying to pay it? That's ridiculous,
Right.
What happens if you lose, who knows? And then you're out and you can't pay this money back. So it's don't
But
get in over your head.
right. But one of the things that I harp on constantly is that finances are purposely confusing. The financial industry keeps it that way.
Hmm.
And so they prey upon what you don't know. And so if you are an accredited investor, you are even less protected. So you couldn't say get a reverse mortgage and then realize it was a craptola investment and then try and sue them. If you're accredited, you would have less protection. They'd say you should have known because you're accredited, right? So let's go over what it takes to be accredited. And again, it's not like you're not a card carrying member of a rich boys club or a rich girls club. It's just a way, if you were, say, to sue someone for selling you a security that you didn't like, and the government would then look at your net worth and say, sorry, you should have known, right?
Right.
Okay. And to prove that you're accredited, a lot of times you just need either a lawyer or a financial expert to say so, to sign off on that. So to be accredited, a person must demonstrate an annual income of $200,000 per year or $300,000 joint income for the last 2 years with the expectation of earning the same or higher income. So if you hit the lottery and your lottery prize was 1 year payout of $200,000, you're not an accredited investor because we don't expect that you'll hit the lottery every year subsequently from here on out.
Right. Right. So that's the track record. They assume then that, okay, if you've got that amount of money, you know what you're doing. If you're investing in some weird Russian gold thing, or I don't know, I mean, there's so many random things out there now that people, like stocks that people invest in,
Yeah.
Bitcoin and cryptocurrencies and all this stuff. And
Right.
you lose. We see people who are, invest in that kind of stuff and they lose half of it or they lose all of it, right? Stock market
Right.
craziness, right? So this is a way of basically protecting, Merrill Lynch or these other companies that are like, look, you came to us at Merrill Lynch or Charles Schwab and you had $100,000 that you wanted to invest in hog futures, or again, whatever the hell people invest in, because
Right.
the stock market makes no sense to me. And then everyone, they lose their shirt, right?
Right.
Or soybean futures. I mean, this kind of stuff that's the kind of stuff people invest in. Makes no sense to me. And
Right.
then they lose their shirt. It's a way of protecting Merrill Lynch and Charles Schwab from this investor coming back saying, "Hey, you lost all my money."
Right.
It's just, and again, it's only for securities. It has nothing to do with real estate. I mean, it's
Yeah.
only for security stocks. Again, buying a home is not a security. That is a
Right.
purchase.
But perhaps you want to buy into some kind of security, right?
Mm-hmm.
And so you need to know. And so, like I said, I was speaking about it with our lawyer, and then I wanted in on an investment that I was trying to make through my IRA. And they said, whoa, you can't get in here unless you're part of the big girls club. So send us a letter of proof. And so I felt like this is something that our listeners should understand because it makes a difference.
Right.
Okay. So an individual must have earned this income above the thresholds, either alone or with their spouse, over the last 3 years. It doesn't count if you've only done 1 year of this income level and then the next 2 years of joint income with the spouse. The only exception is if you have been married in the last 3 years, then you can count your alone income because you don't have 3 years of marriage, right? An individual is also an accredited investor if he or she has a net worth exceeding $1 million, either individually or jointly with their spouse. Now, again, your home value does not count in this, and especially because your home value can bounce up and down, right? So they
Right.
can't really count that anyway. And then you are also considered an accredited investor if you're a general partner, an executive officer, a director, or a related combination of an unregistered security. So like if you have a business that, produces these things, like you can count that kind of thing.
Right. Yeah. So again, that $1 million net worth, maybe you live in a $500,000 home value. That doesn't matter. It doesn't count. You've got to, maybe you own a bunch of real estate. Maybe you have, partnership in a business that has, over $1 million in net assets. Maybe you
Right.
own, like your dad's company, right? Who all these big diggers and earth moving machines for his landscaping company. He would qualify under that even if he didn't own any real estate because he's a part
Right.
owner of a company that has all of these net assets that are being depreciated and therefore his net worth is over $1 million, et cetera.
Right. Now, an entity can also be an accredited investor if they have assets exceeding $5 million. dollars. And that's something that, you would talk to your lawyer about. But in 2016, Congress also modified the definition of an accredited investor to include financial experts. So say you're just getting started as a stockbroker and you don't meet this threshold just yet, you still are an accredited investor because you are a certified financial expert. The government's going to say, you do know what you're doing. Even if you haven't actually made this money yet, you are trained to do this. So that's another way. You can't prove that you're not accredited and then go to work at like Merrill Lynch or whatever, right?
Right. Yeah. Again, this is all on a level of to protect the. I don't know. I mean, the person that maybe works at McDonald's, makes minimum wage, has a little bit of money saved up, and wants to buy into some, fund that they see advertised on television.
Right, or a hedge fund, right? Someone says, "Oh, would you like to buy into my hedge fund?" Right? Which means you're going to pay a ton of money,
right?
And you're mostly to me as the hedge fund manager, and I'm going to make some investments that probably will come back around 4% if I'm doing awesome.
Yeah, if you're lucky.
And it's a really, really high fee fund. A lot of rich people like hedge funds because they feel like they don't have the time to manage their investments. And so they buy into these. They're kind of like, it's like a Tag Heuer, like you buy it because there's some panache.
Like status with it.
To a hedge fund. Right. I think
like
those are called. Right. I think those are called Veblen goods in economics. It's like the more that it costs, the more you want it because of the status of having it, even though it's not necessarily worth the extra money.
Right.
And so if you are pitched a hedge fund and it ends up being a terrible investment and you are accredited, that's on you.
Mm-hmm. Now, what happens if it's not on you, right? You don't have your big girl pants on. You don't have your big boy pants on. You're making $30,000 a year. You've saved up $1,000 and you buy into some hog futures thing or some soybean futures or some Bitcoin thing. Who knows, right?
Right.
With some hedge fund, and chances are, you lose the money, right? Just $1,000 gone. What recourse then does that person have? Do they end up able to say, go back to Merrill Lynch or Charles Schwab and say, hey, I want my $1,000 back?
Well, that's when the Securities and Exchange Commission gets involved, and they'll go after the company that sold you these things. Now, here's the rub is that if you started a hedge fund and did terribly, and you went after non-accredited investors, then the SEC would come to you and say, I need to look at your books. I need to look at your computers. I need to see everything. We're shutting you down. We're doing a humongous investigation. And guess who pays for that? You do. And so the Security and Exchange Commission is a scary thing. And so if a company is acting not on the level, then they could get in big trouble for this. And, one thing that really speaks to me about this law is that I had a friend whose dad was elderly, like older than most of us, most of our parents in our generation. And he came down with some really debilitating disease. I want to say it was Alzheimer's. And once he hit retirement age, he was flooded with all of these sort of investment opportunities, reverse mortgage type things. And my friend, he lost his father and he was cleaning out his house and he found all of these really, really predatory mailers. And he was so disgusted about it because he's like, look, my dad was already down in the dumps, already sick, already running through his retirement. But because he now had a pension, because he now was, somehow these predatory companies know who hits their pension, who hits their retirement age, and they start flooding you with mailers. And these people on a fixed income think, well, okay, this could help me get some more cash to live off of. And so I think it's important. This is maybe a political opinion, but I do feel like it's important to protect non-accredited investors.
Yeah, for sure. And again, this is why we love real estate, right? This is why we don't even get, mostly involved in this stuff. I mean, I spoke 2 weeks ago to a group that work with senior care and elderly care. And what this whole group, they're in a room, they work at funeral homes. They also work, the hospitals, all of those stages. There's multiple stages when someone's, going to be going to an assisted living facility, all of that stuff. Their goal, they're doing really great work, is to make that transition very, very easy and protect them from like the predators like this kind of stuff,
Yeah.
And so I spoke to them about how, like this reverse mortgage garbage, like all of this stuff. As a real estate investor, we have an opportunity in this room of these shared people who are in this room to help seniors, to help the families of these seniors know that, look, they can even build. There's so many ways that you can protect their wealth that we teach here on this podcast through real estate investing, how you can like protect that family's wealth so that it's not given over to some reverse mortgage crap, that it doesn't go to the senior home, right? That they're taking money out of your home and your equity and all this stuff. Like, how can we protect those assets? And, it's sad that so many people get taken advantage of that way.
Right. And so I think it's important to reiterate that one of our main ethos here on our podcast at Morris Invest is for you to understand your financial situation, understand the buffet of financial products that are available to you, both good and bad, and really take control of your own wealth building goals, because no one else is going to do it as well as you can. You have to be capable of doing it, no matter how little or how much time you have to put into it. You have to really, you got to be involved. You got to know what's out there. And so that's our goal. That's why we do this podcast.
And that's the sad part about like the stock market, right? I remember reading Jim Cramer's book, who said, if you're going to invest in a stock, like some company that you have no control over, right? Like Coca-Cola or something like that, you need to devote at least 10 hours a week to studying Coca-Cola. Because there's a lot of, their business, they own, shipping distribution centers in, Peru. They've got water costs to make Coca-Cola. They've got sugar costs to make Coca-Cola. You need to know all of that if you're going to put your money into Coca-Cola. And just like kind of blindly throwing your money at a mutual fund, hoping that you're going to get some kind of returns, it's not the way to do it. If you're going to invest in these companies, you have to be educated about it. I mean, that's, I think, why you and I love real estate so much, because it doesn't operate that way.
Right.
There's strong fundamentals of owning properties that are producing a certain cash flow. I mean, it's totally different than investing blindly in some BS company somewhere that you have no control over.
Yeah. But that's the last time you're going to quote Jim Cramer on my podcast.
Well, I mean, I read his book a number of years ago, and he made a great point about it. He's like, look, so many people wonder why they, look, mutual funds, you make no money, right? It's like 2% return. And that's where a lot of people have their money, the mutual fund managers make so many fees off of it. And that's one thing that you always harp on here on the show is, you got to know, man, when you're like investing in the stock market and these fund managers, they're making so much money off of you, and you're getting what, 2% return?
Yeah. And paying 1% in fees. So that's net 1%. That's not awesome.
Right.
And that's like losing money because of the rate of inflation. So you might as well just have never even tried. This was a hard pill for me to swallow, because I was of the camp of that it's not timing the market, it's time in the market. So let's put as much money as we can there and just wait it out. And I didn't really understand how hard it is to succeed like that.
It is, because, the great misnomer, of course, is that, yes, okay, let's say we're going to put $100,000 into the market, and then we have this big crash. Well, and then, you lose all that money, right? And then most people say, but 10 years later, it's bounced back now. It's bounced back to where I put it in.
Barely, yeah, right.
But so that in that 10 years now, you've lost all of that growth time. Like, what if you had bought real estate? What if you had purchased real estate assets that are going to produce cash flow? That entire 10-year dip, you now have cash flow coming in every month that you can take vacations with and live your life and pay your expenses. So you lost 10 years of investing in the stock market. And that's the thing that drives me nuts. People always say, well, yeah, it bounced back to where it was before the crash 10 years ago.
Right.
Oh, good. 10 years wasted. What about the person who is nearing retirement, who's like done and not going to put any more money in? Now they've lost everything, which is what happened to a lot of people in the stock market.
Yeah.
Don't get me started on the stock market.
I know we didn't mean to crap on the stock market. We sometimes do that accidentally. I know, and I always try and pull you back from this tangent because I don't want people to think that you're like I don't know, like one of those guys from the Muppets who just gets on a whoa,
Well,
like
look
a
at this.
curmudgeon-y.
Look at
I
this. I'm
know.
holding this up right here. Look at this. Look at this. Wall Street Journal, cover of the Wall Street Journal this week. Mutual fund ratings are not what they seem. Morningstar, which is the top ranked company which ranks these mutual funds, the Wall Street Journal did an analysis and found out that when they give their big star ratings to mutual funds over the years that everyone banks on, they ended up being total crap. And the returns were paltry, maybe a 2% at best on some of the funds. Most of them were break even, and all of the fees that people are paying. So this company Morningstar was making money off of the fact that they have this rating system. And it's on the front page of the Wall Street Journal. So many Americans have their retirement tied up in this kind of crap.
Yes,
It makes,
I know.
It makes
I
me
know.
furious. I think about our parents. I just, I don't know. You're talking about predatory stuff. These fat cats who sit on Wall Street who
Yeah.
make all this money off of these fees, and Americans are just kind of blindly going into these 401k plans,
I
and
know.
they don't
And
know
I
what's
can
in
tell
them.
you stories about, my mom and her husband's IRA and she was like, "What is, like it's I know. But you're on a tangent, honey.
I know,
I'm
I
gonna
know, I know.
I'm gonna pull you back.
Invest
I'm
in
gonna
real
stay back.
estate. That's all I gotta say.
Clayton's gonna have a coronary. Calm yourself.
All right. Well, that's going to do
Okay.
it. So any more on what an accredited investor is. So if you're investing in the stock market, you're investing in securities like, Hog futures or Bitcoin or other stuff like that. You need to know what it means to be accredited, because you have to put on your big boy pants if you're going to invest, or big girl pants.
And as a company, right? If someone comes to you and wants in on your investment, but they are not accredited, right? You're kind of like, I don't want that, because even if you're a well-intentioned company, right? You want to work with people who have done their homework, who understand what they're getting into, and have demonstrated some kind of success with money up to this point, right? Because the people who don't have this kind of money or who are not accredited are just going to be the squeakiest wheels. They're going to be the scaredest investors, right? Reasonably so. And so, a lot of times a company is going out of their way to make sure that you're accredited, because they just know that they're dealing with a sort of easier class of clientele, right? And so now you, having listened to this podcast, you can think, oh, I would like to have a letter like this. I would like to see if I'm accredited, because that will help me make faster decisions. If I see an investment I want in on, boom, here's my letter, right? It's like your pre-approval letter when you go shopping for a primary home. And so I wrote to our experts and I was like, I want this, give me this letter, right? But also it's sort of, now when I'm searching around the internet, I'm thinking about investments, I do feel like I'm a big girl. I'm responsible for myself. There's some sort of like confidence there as well. And I don't think like, oh, I need the government to protect me, because I know we have gotten to a certain point.
Yeah. No, it's a great lesson. It is a great lesson. And of course, we will keep an eye on these laws. Obviously, everything's kind of shifting right now with where this tax bill is going in Congress and what's going to happen. There's going to be a lot of changes coming, it seems, in the tax code. And what does this mean under Dodd-Frank? There's some big changes coming to the Dodd-Frank law. What does that mean for you as a non-accredited investor versus being accredited? Like, we're going to keep our eye on this space. So we do the homework. So you don't have to. While you're driving, you can listen to us, and hopefully you'll get some good feedback.
Hopefully so. Okay. Well, have a good week, everybody. And
have a good week.
I guess that's all we have to say.
And just remember just to be kind to me. That's all I'm asking, okay? Just be kinder.
Right.
Just be kinder to me. That's all I care
Yes.
about. All right. All right. We'll see you next time here, everyone. Please, thank you so much for subscribing to the show. If you haven't already subscribed, please do. We publish the show multiple times a week. We try to give you great information about the world of real estate investing, helping you grow passive income and legacy wealth for you and your family, to protect you, to make sure you're not being taken advantage of out there. We'll see you next time, everyone. Take care.
Bye now.